traders, welcome back to my channel. This is your girl Sophie B, and this is your weekly market recap for October 6th through the 10th, 2025. In this video, we're going to break down what moved the markets this week, what to look out for next week, and some simple trading setups to keep your eyes on. So this week, the market fell sharply, with SPY finishing the week down about 2.4%. And most of that drop came on Friday after Donald Trump Truth Social post reignited tariff fears. So he hinted at a massive increase in tariffs on Chinese goods, and the market reacted fast. SPY sunk nearly 2.7% intraday as traders rotated into defensive stocks and bonds. So Trump followed up this morning with another post doubling down on those tariffs, criticizing China's hostile trade behavior, which kept futures choppy going into Monday. So if this feels familiar, it should. The last time Trump brought up new tariffs back in April, the market tumbled roughly 10% in just 2 days. But after that, it rebounded within weeks after the rhetoric cooled. So this week, give me one moment to share my screen, just in case you're not familiar, so you'll know exactly what I'm talking about. And excuse the lines that I have drawn on my charts. But this is a chart of SPY, the S&P 500 ETF. And as you can see, this was back in April when Trump first announced those tariffs, and we can see how the market rebound. And then you can also see how bad the market fell Friday. So I just wanted to give you a visual just in case you were not aware of how the market reacted on Friday. So this week, big tech names and semiconductors were hammered. Nvidia dropped nearly 5% on Friday after strong midweek highs. AMD sank around 7% on the tariff concerns, and Amazon slid roughly 5% as supply chain exposure worried investors. So heading into next week, I'm watching for a potential base building in defensives and oversold bounces in the major tech names if the sentiment improves. So options flow followed the same story. Traders piled puts into SPY, the Qs, and NVIDIA as volatility spiked and implied volatility surged across the board, rewarding traders who use bear put spreads and credit call spreads. So this week, what worked for us were bearish credit spreads on SPY and the Qs. We had protective puts on our large caps and iron condors in the slower moving defenses. So next week, we want to keep our eyes on the CPI data midweek because this could shift the Fed's narrative. We also have earnings from big names like Netflix, Tesla, and JP Morgan. So we want to watch out for those. And also with SPY, we have key resistance levels in between 660 and 670, while we have support around 640 to 650. So this week, some possible setups that we want to watch out for are bearish reversals if the tariff talk cools down. And we also want to watch out for bearish flow if the CPI surprise is hot. Okay? So just a quick tip going into this week, you want to just make sure you trade small and define your risk while the headlines drive volatility. Spreads are going to let you stay in the game without being overexposed. So that's basically all I have for you for this week. So drop your favorite setup in the comments. And don't forget to like, subscribe, and hit that bell so you never miss a weekly update. And also make sure you join our group chat. The link is in the description box below. So you can meet up with us every Monday at 08:30 Central Standard Time as we do live trading. So that's all I have for you this week. I will catch you in the next video and make sure you stay focused and trade smart.